What is up, everybody, and good morning to you. Happy Monday, last week of the month, and I welcome you to Futures Trading with NinjaTrader. Jim Cagnina, Senior Education and Training Specialist from NinjaTrader. What's going on, man? Happy Monday to you.
Happy Monday to you too, man. October's cruising through. It's going to be Christmas before we know it.
I know. I mean, I'm already, starting to see what I want to do for Christmas. Santa, this, that, the other. So yeah, it's gonna be a fun time. But let's get to the action here on the markets. And it looks like you've already got a little bit of a trade possibly set up. What you looking at?
So here's what I'm looking at. This is the E-mini S&P stock index futures. And we've been trading kind of range bound today. I know we have some extraordinary wicks on the top and on the bottom. Like here's an extraordinary wick at the top of the opening range. Here's an extraordinary wick way down here. But a concentration of the volume has been in the value area, and it's been between the first standard deviation band on the top of the VWAP and the bottom standard deviation band, first standard deviation band of the volume weighted average price. And so, we see we're just going back and forth, back and forth, back and forth.
Yeah.
And so that kind of makes sense to me, because it's like, hey, guys, there's some earnings coming out, but the really important ones are coming out tomorrow, not today. Not that much economic news other than PMI came out, which was a big miss. And it's that FOMC blackout period. So it might be a range bound day today. So what I'm trying to do is straddle those ranges, right? I'm a little bit conservative on my sell side up here at 3,800. I'd like to try to sell a contract up there.
Yeah.
And just wait to see if we could get a penetration to my target wick, which is way over here from 740 to 750 this morning. And then but on the bottom, I'm a little tighter here. I'm right at that Fibonacci number 61.8, a little bit above it. So trying to buy down here, trying to sell down here, looking for a reversion back to the point of control. I don't care which one gets filled.
I like it. So you're pretty much just trying to go ahead and short the top, try to buy the bottom, because all you're expecting is range today and not necessarily a trend. I like that. Now, let me ask you this. You've got the Chinese news coming out, right? The China news, I guess. What are your thoughts on that in terms of at the economic level, especially with the weak guidance, the president getting reelected? And more importantly, how can you trade that in the futures market outside of the ES, or is that the best way to trade it, period?
Well, all the markets are going to react, right? You're going to have a reaction on the stock index futures. You're going to have a reaction on the commodities market. Think about copper as an example. And then you'll probably have some interest rate markets that are going to have some movement as well. And I think you just got to treat it as any other potentially extraordinary news release or piece of information that comes across your way, which means make sure you have your stops in and try not to anticipate exactly what the outcome is going to be.
Yeah, no, that makes perfect sense. And we'll come back and visit any other levels that we may have to based on that news there. This is a 10-minute chart that you're looking at. We've gotten a nice little bounce from, I think it was like the $3,500 level. If we want to zoom out and maybe take a look at the daily, because I think it was the CPI number that came out earlier last week. And then we went all the way down, but then we bounced right from there to the upside on the SPY. I want to take a look at that and see what your thoughts are on the bigger levels on the dailies. And if you feel like, hey, this is a bounce, right? Because I'm looking at your 50% retracement. I love your Fibonacci's there, or Fibonacci's as you like to say, I believe. It's coming, it's approaching that. So are we looking to go short here, possibly swing some,
Yeah. So keep in mind, we have Thursday, this is Thursday. We have GDP, which is going to include that PCE number that everyone is all excited about. And the consensus is a big range. I can show you that later, but that's coming up and that's going to be anticipatory. So I don't, that's kind of on one hand, right?
Yeah.
Then you got the FOMC the next week. On the other hand, you have all these earnings that are coming out, right? So you're going to have a tug of war between earnings and, expected GDP and FOMC action over the next week or so. And, we got some big names tomorrow after hours. We got Alphabet, Microsoft, Spotify, Texas Instruments, Universal Health. And in the day, we have a whole bunch of them too. So that's going to trigger some excitement right now. This rectangle I have right here at the top, that's my area of resistance. So, around 3,800, right? 3,797. And I extended it up to that 50% retracement level. That's going to be resistance. To close above that, it's going to be meaningful. And we have that 50-period EMA too, sitting smack dab in the middle. And then on the downside, we have a big range. A lot of people are, hey, Jim, is the bottom in? And, we have a double bottom potential. Earlier we identified it, but could we go lower? I mean, I don't know, maybe, but nice area of support down here, right? And it's pretty far away, 3,600, give or take a couple of points.
Yeah, that's my biggest thing. It's kind of like, I was waiting for that 3,500. Unfortunately, I believe it happened before the market opened, so I couldn't quite grab it. But I was waiting for that little bounce there. I missed it, and I was continuing to wait for it, and it just never came right back down. But it'll be interesting though, especially because is that what is a 200 that you have there, right? Or is that the 50?
Yeah, no, I have a 200 and a 50. So I have a 200 simple moving average.
Yeah.
And I have a 50, I think it's EMA. Yeah, 50 EMA. So that's kind of my preference from a daily chart to look at those two moving averages.
Gotcha. We'll take a look and come back next week and see what that looks like. But let's go ahead and take a look at the Nasdaq and see if we have a good movement there that you like in terms of levels, whether that be on the daily or the intraday.
Well, we'll start with the Nasdaq, and Nasdaq's been weaker today than everything else, whereas the Dow Jones has been stronger than everything else today.
Yeah.
So it's, these stock index futures, they move in general tandem, right? There's a general systematic behavior, but on any given Sunday, something's a little stronger or weaker. And so Nasdaq right now is looking a little weaker, relatively undecisive candle. This is market uncertainty, where we have a big wick on top, a big wick on bottom, and a small body of a candle.
Yeah.
So we'll see if that ends up as a doji or not. Again, earnings coming up,
right?
Thursday's big event, but this is below the 38.2% retracement. There's no double bottom here. I'm open-minded on this market and look how far up the resistance is. It's pretty far away. So I think there's a big range potential here in the Nasdaq over the next couple of days. You got to be careful.
Looks like you've also got a bit of a trend line there drawn on the daily as well. So it could possibly, so matter of fact, if it hits that trend line, if it hits the 50 and it's coming up to the area of resistance that you have, and it's got the 50 Fibonacci level. See, now I'm saying it like you. I promise I don't even mean to. I'm just catching on. Sure. My apologies. But what I'm saying is you've got a bunch of things there as resistance. Should have a tough time pushing through.
Yeah, for sure. And it'll be a challenge. And then if it does push through, my advice is always wait for that second confirmation candle. Because, a lot of times we just breach levels and it doesn't follow through. And you're like, oh man, I got long, and the market breaks back down to where it started from. So you got to be careful with that idea as well. But yeah, this is looking weaker. But the Dow, if I could jump over to the Dow real quick and we could take a look at daily charts intraday in a second.
Yeah.
This is looking different. We have a double bottom in the Dow from October 3rd and October 13th. And we have a nice channel coming up. We're above the 50 EMA, right? We're above that 50% retracement. We're above the 61.8% retracement. So the trend is almost reversed here in the Dow. Now we have a long way to go to get to January highs for sure. Yeah. But I'm going to have to start extending this fib line up to the next level if this keeps rallying, and this is looking pretty strong.
That is definitely looking pretty strong there. But let me ask you this. You talked about waiting for a confirmation, right? What does that mean for you in terms of looking at the chart? What needs to happen? If you want, you can go back to the Nasdaq because that's where you were talking about it. But what needs to happen in order for you to say, you know what, this is confirmation?
Well, that's a great question. This is a perfect chart. So here, this particular candle here on Friday, we closed well above that moving average, and that moving average was a pretty good indicator of resistance, and it's also right by the 50% retracement. So there's two areas of interest right there, and so we closed above it. Today, if we were to close with the candle the way it's looking, I would say that's a confirmation candle. Now I'm looking for places to buy the Dow Jones futures, right? Because this is the second candle after the breakthrough.
And is that because of the retest? Is that what that is?
Yeah.
Is it because it's retesting that?
Will it retest or not? I mean, even if this candle was just started off here and went green all the way, again, another day where we had continuation buying, right? We had continuation buying, which meant this wasn't some weird fluke. This wasn't some position flattening. This wasn't some system trade. This was a legitimate buying, right? And then across the board. And now we have it again today, which is going to make for that confirmation candle. MACD looking good. Everything is all right. In that case, it's like, all right, tomorrow I'm gonna be looking for places to buy again.
Yeah. All right, cool. So we took a look at that. Let's go ahead and take a look at the intraday on the Nasdaq if we can. Now, or Dow if you feel like that's better, because I know that's a little stronger looking there.
Well, Dow, okay, it's eating my fib line from earlier today. I'll redraw it a little bit. So, in thinking about fibs too, here's the other thing to think about. I originally drew this fib high to low, right at R1, right at where we opened last night, and I went all the way down to the low, right? I went all the way down to the low, and we haven't retraced back up to that 61.8%, so it's still legit. Now, earlier in the day, I had the fib line to the previous low, right before the market opened up. And again, we didn't close above that 61.8%. So I felt like the trend is still down. So I want to bring it back to where it was. So again, from this point of view, I'm looking for places to sell. That VWAP ever since the opening range, pre-market, right here, 910 to 920, has been a really nice area of resistance again for this market. So I wouldn't hesitate to try to get short. And the trade idea would be, hey, let's try to get up to that VWAP again. Oops, sorry about that. Let's try to get to that VWAP again and try to get short, right? That's kind of the trade idea right now. And then because it's a micro, you might even want to consider, a 2-unit trade idea if you wanted to. It's like, oh, okay, so we got 50% point of control, 61.8% for a second unit if you wanted to. And this is a micro, so now I got to put a target in, right? So I want to buy it back lower, right? That VWAP band has been so key. Look at this. 1, 2, 3, the last 3 out of 5 candles we traded there. We've breached it earlier. We traded well below it for most of the morning. So that's my target right there for that in the downside, 61.8% or the top of the opening range, depending on how aggressive you are. Then, all right, I'm out. Stop. I'm wrong. We're rallying. So that's what this trade idea looks like to me right now. And we got 10 points on it right now. Let's see 8 points. We'll see how it goes. Remember, real-time simulated live NinjaTrader platform today.
Yep, and yeah, that's a good reminder for me to go to tell the folks. So the information you're seeing is absolutely real time. You're seeing it, the action as it happens. However, the account itself, the P&L, is a simulated account. But make sure you guys check out NinjaTrader's platform. Matter of fact, Jim does a show just about every morning on ninjatrader.com/events. And he also has a show at the close called Bars Closing, which I love, by the way. I feel like I'm not sure. I don't know if you're a tattoo guy, but that's you got to get that tattooed somewhere. Bars Closing. I like that. I feel like one day when I make my first million trading, Jim, I'm gonna get a tattoo. I have no idea what it says. It'll be something related to day trading. But
yeah, no, it's funny. I explored this idea over the many decades with my wife, and she's always against it until recently. She says, okay, you're old enough now, you can get one.
Yeah. You know what, Jim? Now you're mature enough to go ahead and make your decision is what it is. You weren't like 5 years ago or 10 years ago, but now she's blessed you with the permission. That's awesome, man. Sweet. So we've got our trade on. We'll kind of keep tabs on this one to see if we go ahead and hit that profit target, especially while you're live. That would be awesome. But let's go ahead and go over to crypto in terms of Bitcoin, because with that move from China heading a little bit lower, maybe that's impacting the crypto market. We'll take a look what your levels are and what insight you have.
All right,
on Bitcoin.
Let's get it going here. So I'm surprised. Here's the correlation with the correlation here with the Nasdaq. It's starting to become positive again. It's right at that 0 line. It's not always positive. Sometimes it's negative. Sometimes it's positive. Right now, again, we have a range. We have a range, and I'll extend my rectangle a little bit further. This is my area of support at the bottom, area of resistance on top, and we've been really in it for a long period of time. So we're not getting a lot of traction either up or down. I'm gonna, you could even extend this idea all the way back to this other, late August, right? But we're kind of in that pinch, right? We're in a pinch right now where we could break up or break out. I don't know which way we're breaking, for sure. But I'm going to use I want to see a close inside a rectangle or a close below inside a rectangle, and then that next confirmation candle will be key to see what the direction is going to be for me right now. But right now, I mean, it doesn't look overly bullish.
Yeah.
And I'm wondering if there's less money flowing into these asset classes because there's so many opportunities buying stuff at a discount in the equity world.
Yeah, and that's a good question because again, it's all about, where can I make the best bang for my buck? The risk reward, this, that, the other. And I feel like there's more uncertainty when it comes to crypto compared to the other markets. But that's a good point and good call out there. And again, you continuously that $2,000 level, or excuse me, $20,000 level continues to be kind of like a fun little area of interest for me. I'm not invested in crypto, so to me, it's kind of like, can we come back to like the $1,000 level so I can purchase some? But no, I like what we're seeing there. Let's go ahead and check out
Yeah.
corn. Or what are your thoughts on that? I guess.
Natty, yeah, this is great. This is a great picture. This is the Henry Hub natural gas in the U.S. and this is kind of what you'd expect in the fall, right? In the fall, where we try, we get our natural gas, we store it because we don't need it. It's not winter yet, right? We store it, and these prices do kind of go down. So this is typical from a seasonal point of view, even though seasonals don't always work, so don't trade just off the seasonals. But nonstop sellers have been coming in really strongly since the middle of October here, and we still see it. Today's the first day we've had a green candle. We had a pushback. We have finally we have buyers coming back in, and
Yeah.
I expect this to probably retrace nicely as it gets colder and colder out. Here in the U.S., we have a supply chain issue with liquefied natural gas. Which is also causing a little bit of a problem, which means we have a lot laying around. Right now there's, off of the coast of Spain, there's barges that just can't get unloaded, right? It's sitting there with LNG. So it's a problem. But right now I do expect as we get a little colder here in the session, this is going to kick up a little bit.
Yeah. And then, the seasonal trades, I know there's a different, types of trades in terms of seasons, right? So the one that you just mentioned in oil, and then you kind of have, man, what is it called? I think it's called January effects on the equity side of things. So that's another trade there. And then of course, sell in May, go away. You've got the Santa rally in December, and you have all these fun little things. But yeah, you definitely shouldn't just say, "Oh, this is what we've been doing for XYZ. I'm going to do it again," because you can easily go ahead and get burned. So definitely be safe out there with that. Let's go ahead and check out corn if we can.
All right, then if we get a sec, let's get over to British pound. That's exciting.
Okay.
We literally, so corn's kind of, again, it's plateaued nicely, right? Nice area of support down here, 665. I'm reading of no, problems. Everything seems to be kind of normal. I could even put another rectangle up here where my crosshairs is to kind of show you how range bound we are sideways. So there's not that much excitement today. So I would just kind of, even though the USDA today has a couple of reports, a crop progress report is coming out at 4 o'clock today from the USDA. So you want to pay attention to that if you're trading corn, because that could directionally move stuff. But right now we're range bound.
Yeah, it definitely looks like, and that's a nice little area that we could have bought as well, especially because if you always looked left and you saw, hey, that's an area of support. That wick there, I don't know exactly what date that is, but it could be the 20, to the left. So where it went ahead. Sorry, I should describe this better. Where it went ahead and tested the rectangle again. So that area of support was once again tested right there. And it looks like that's the 28th. So as soon as you see like that type of candle, it's kind of like, okay, cool. Buyers came in. Let me go ahead and see if I can go long here. And then your stop loss would be, or at least this is for me, I'm not speaking for anyone else, but like to me, that stop loss would then just be below the wick of that left candle that you were just at. And try to see if you can get yourself a 1-to-1 and then maybe even a 2-to-1 and see where you want to go about it. Same thing in terms of resistance, right? You can see that $700 level continuously. The buyers just can't hold it there on the daily. You peak above it by 5 to 10 points, but then it kind of just comes right on back down, and now you're in this range right over here. Anything you're seeing intraday that you like on either corn or gas?
No, not on my radar screen. We could take a look at nat gas maybe in a second, but while we have a daily chart, if it's okay, could I just pop up a British pound?
The British pound, yes.
Okay, so here's, we have a new prime minister.
Yep.
We have a new prime minister. The old one is after 44 days. Is gone. The new one was announced today, and we had an interesting sell-off in the pound versus the U.S. dollar. I expected the opposite because you saw on Friday here, this anticipation. Buyers kicked us all the way back up here. Really big wick on Friday. I circled that target wick. That's our next destination, in my opinion. 1073 in the pound futures, and this moving average cross is held pretty nicely. So back below that 50%. I'm surprised at today's reaction that the pound's not a little bit stronger, just from an optimism point of view, but it's not. So technicals matter.
You've got the 50 period right there, right? So are you waiting, or when I say you, I mean, if you're a buyer, would you be waiting for it to go ahead and pop above that on the daily close and then you can look to go long? Or do you feel like the best area or best trade could possibly be to the downside here?
I think I'm bearish here, so I think the best trade's to the downside. But when we started approaching this target wick down here around 38.2%, I know it's a long way away, but really a day or two we could be there.
Yeah.
That's when I'm a buyer, right at that target wick.
Gotcha. Yeah, definitely want to make sure, especially because you've got the Fibonacci, like you mentioned, at the 38.20 right
Yeah.
over there as well. Let's come back and test or see if you have how your trade's going. I think it was on the ES side. Excuse me, on the Nasdaq.
Yeah, so we have a micro Nancy going. We're pretty much we're about 2 handles into it right now. But at least the proof of concept's holding with this VWAP, right? So this is going to be my lessons learned at the end of this trade. Will this VWAP hold, and will we eventually have some traction on the downside or not, right? And that's kind of number one. Point of control also is kind of important. As a matter of fact, it's at the 50% level. So I would say, hey, let's get a second unit there. Let's try to get a second unit there. Let's change our stop to 2. And then let's tweak our stop up a little bit higher. And of course, as soon as I do that, we get filled.
I was going to say, ask and you shall receive, as you do go ahead and get filled on your second entry there. And we'll see how this trade works out. And of course, now was there an area that you would say, you know what? All right, here's my third and final ad. Not because you're down on the trade, but because it's a best risk reward for you.
Yeah, so I'd only do 2 usually, but there's a third one, right? And it's a yesterday's high right there. Would be the third one at 366. Now we have 2 units, so typically I want to get 1 unit off the table. I'm going to use that 38.2, and then if we can get that unit off the table, we'll only be short 1 contract, and then I'll move my stop to break even. I'll break the stop down to a one contract stop, and I'll move it to break even to see if we could get a runner toward the bottom.
You know, and thanks to you, something that I've been doing, or at least practicing on doing, is, so say, for example, if I'm short, you know, similar to you, kind of like short, let's say 4 contracts on the future side of things, as my limit gets hit on the first one, I'll go ahead and move it to break even. That way I never go red. Or before, I would kind of stick to the idea of like, well, if I like this risk area before, I'm going to kind of stick to it, whatever. You know what I mean? But now, obviously, that helps in terms of making sure that my stop losses aren't hit and I'm just kind of breaking even. So, of course, I appreciate you for kind of teaching how you do it. And, of course, I've evolved in kind of taking those methods as well. And we'll see, because right now we're moving a little bit to the upside. How often do you find those VWAP bands, right? Not the actual VWAP, but the top band and the bottom band. How often do you feel like in your seat time experience that those come into play as an area of bounce or area of rejection?
Yeah, that's a tougher indicator to use for that. But what I'd like to look at is it skirting along? On a trend day, you'll see it skirting along the bands, either the first standard deviation band or the second day, or sometimes the third. And so when it's continually skirting against it, then it helps me identify the trend day. Right today, it's been all over the map, right? I mean, we started, we've been below, above it. So that's kind of how I use it. This deviation band up here, this first deviation band, we haven't been nowhere near it all day. Nowhere near it all day, which helps me say, no, I don't want to go long, because this is where my potential is. And, we're just not near it. So it's more of a trend directional kind of confirmation thing versus, all right, I'm buying it here, I'm selling it there.
Gotcha. Okay, that makes perfect sense. Yeah, because when I added, I've always used VWAP. I love VWAP. We've talked about it. I love my whole numbers. I love the VWAP, but I've never used the bands itself. I've only just used the middle one, or the actual VWAP, I guess you can say. So I'm just curious what your thoughts on that were. I'd love to see if you have a tip of the trade for us, or tip of the week for us, because I know our viewers enjoy watching that as well.
I do have one. I don't have a fancy PowerPoint, but I have the tip, so I'm ready to go when you are.
I'll tell you what. Let's just go ahead and roll it, because I don't have a fancy intro for that right now anyway. So perfect.
Perfect. All right. So I know that, earnings, we have this tug of war between earnings, and we have this and inflation. That's what's going on right now, short term. Long term, though, the more powerful force is going to be interest rates, which means the FOMC. And the FOMC accumulates data as they go forward here. It makes Fed funds target decisions and QE, QT target decisions. And Thursday GDP is coming up amongst us. So, but here's the tip: we have, you have the headline GDP, right? Quarter over quarter. Consensus, in other words, is what's forecast, 2.3%. I don't know who forecasts it; other people do. Consensus range is really big, 1.4 to 3.1. Usually it's tighter than this, and previous was negative, right? So that's kind of the first thing that's going to be important. But more importantly is going to be the PCE, personal consumption expenditures, annual rate. Consensus again is going to be 0.8 forecast, and then a big range again, 0.6 to 2.2, previous 2.0. So if anything comes out of whack of this range here on PCE, if PCE is not in the middle, if it's or even closer to 0.8, if it's over 2, if it's under 0.6, there'll be some whiplash effect here, folks. So have your stops in.
Yeah, so I'm surprised that the range is so big, because typically, like, I agree with you, you don't see that big of a range. I mean, that's almost double, right? In terms of the 1.4 to 3.1, it's like, all right, cool. It could be within this one big old box. So that's kind of interesting to see. And of course, even the bigger one is the PCE number as well, from 0.6 to 2.2. What do you think is a reason for that big of a range, if you have an opinion at all?
I think people don't know. I mean, I don't know. We're in such a unique time. It's with look at the market volatility. I mean, look at these average size of these candles. It's just, there's so much uncertainty out there, and there's a lot riding on this. I think this is going to establish what happens to interest rates for the rest of the year, and probably the first meeting in 2023.
And we're getting all these numbers on the 27th. Is that right? On Thursday?
This one's on Thursday morning. Yeah, it's 7:30 Central, 8:30 East Coast time.
Yeah.
So anyway, be careful, guys, coming into that. And I know earnings are going to give a positive boost to a lot of this stuff, but remember, earnings per share, these are made up numbers, right? I know there's really smart analysts that decide, hey, this is legit. This is we're going to revise downward our EPS for this company for next quarter. There's a lot of that stuff that comes into play. Something like GDP is a number. I mean, there's an equation, there's a model. You get what you get.
Yeah, I keep looking at my screen here to see what earnings we've got coming up around that time as well. So you've got Google that reports tomorrow, Microsoft, Visa, and then of course on Wednesday you've got Meta and a couple of other stocks. But then on Thursday, which is going to be after that number comes out that we just discussed, you've got Amazon, Apple, Caterpillar, Shopify, McDonald's. So you've got some heavy hitters coming up and reporting this week, as we discussed as well. So it'll be an action-packed week, the second half, I feel, because right now, like you mentioned yourself, and I agree with you, it's kind of like range bound, right? Like we're just kind of bouncing back and forth, a little ping pong action, but we might get some range later on this week as you've got your trade that's moving to the north side. Now here, are you going to adjust your stops at all, or is it like, nope, I had my levels for a reason, I'm sticking with it. If I lose on the trade, I lose on the trade, period?
Some of the biggest mistakes I've made in my life are moving stops and moving targets. We have a trade idea. We have a time frame in mind, right? This shows a half an hour. I'll stick around another half hour and watch it. Moving targets around, typically when you have an idea, it results in badness, right? In other words, you get stopped out at a worse price. Or if it's a profit target, you would have done better if you would have kept your original target in, if you're kind of tightening it. So there's a time and place though when you could do it, right? It's say, all right, this is going to be an hour, this trade, I'm on a 10-minute chart, and if it doesn't, we're going into lunchtime, then I could look to change things around. But until then, no.
You've got an interesting rule. What is it? It's like 10x, or like if it's or it's a 6x. It's like if it's a 10-minute. Explain that. I'm sorry.
Yeah. So when we're looking for trade ideas on an intraday chart, I have a 6 times multiplier. So on a 10-minute chart, I'm going to multiply that by 6. So I'm going to say, okay, I want this trade to work in less than 60 minutes, a minute to 60 minutes, right?
Yeah.
If I was making a longer term trade idea with and looking at support and resistance differently, let's say on an hourly chart, then that's a 6 hour duration. Or a 30-minute chart is a 3 hour duration. So I like to tie a duration to the time frame you're looking at.
And the reason, and so say 60 minutes happen here, right?
Yeah.
None of your stops or your limits get hit. Are you reassessing levels? Or are you closing the trade, period? Or is it, hey, case by case.
Yeah, case by case. I'm going to reassess. I'm going to look at it and say, okay, would I place the same trade right now or not?
Got it.
And if I would place it again, then cool, we keep everything the same way. If I'd place it differently, well, my stop I'd put here instead, my target I'd put there instead, then I would change it. So that's kind of how I would look at it. You know, what would you do if you had a blank chalkboard and you had to do something?
Yeah. Well, Jim, it's been a great conversation as always. I appreciate you. And of course, best of luck with your trade there. And don't forget, you can catch more of Jim and his team later on today at ninjatrader.com/events for Bar's closing show. But Jim, appreciate you, man. We'll see you next Monday.
All right, man. Can't wait. Thank you.
Take care.